Lower for quite a bit longer is probably the conclusion that we have to draw after having seen the latest monthly updates from Opec and the International Energy Agency. Opec is basically seeing that the slowdown in production from non-OPEC producers is slowing down, and they're seeing that starting to reverse. The International Energy Agency has been also surprised the market by saying that the balancing of the market, which they had expected to happen later this year, may not happen now until late 2017. So basically we're having a conundrum right now where we got oil demand growth slowing. The International Energy Agency is mentioning both a slowdown in China and India. These are the two locomotives when it comes to demand for oil. And at the same time, we also seen this resilience among US producers as the prices had moved back up closer to the $50 level, that they have managed to maintain production. So it basically leaves us with a big overhang of supply, and that supply is only going to dwindle at a very slow rate, which is going to keep prices capped for now. It also raised some questions about what Russia and Saudi Arabia and other OPEC members can do at the upcoming meeting at Algiers. At this stage, it's probably limited, because really the only thing that could support the price right now would be a production cut. But in a world where the market is still oversupplied, that would just lead to a market share being transferred from these countries back towards US producers, who would pick up production if we see the price move much above 50. So where does this leave us in the near term and the medium term? Well, we've been in the 50 or low 40 to low 50 range now for several months. We're probably going to stay within that for the foreseeable future. The call for a 50 or low 50 end of year price is probably going to be challenged now in considering the latest news we had. And the return to $60 is now postponed well into 17, perhaps not even before 2018. So we continue to look for trading opportunities within this range. The market has been selling off since yesterday, where it got a boost from the returning or the recovery in the US stock market. But today we are reacting negatively to these latest reports. So I will be looking for some short-term buying opportunities in both WTI and Brent, but I don't think we're quite there yet. We may see the market have to drop another $1.50 to $2 before we start to see some attractive levels. But overall, low 40s, low 50s, it's going to stay with us for quite a bit longer.